Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. He comments on Bitcoin's giant rise and whether that will continue. He also has thoughts on copper, crude, lumber, and the bond market. James Corbett, publisher of the Corbett Report, checks in from Japan. He talks about the Robinhooders, biotech, bioethics, China, and the growing gap between the very rich and everyone else. WolfStreet.com's Wolf Richter weighs in on interest rates, cryptocurrencies, and tells us while vehicle sales are down, dealership profits are way up. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at ChartsByRoss. Welcome back to This Week in Money, Ross.
Pleasure to be with you, Jim, and another week with market activity, as we always can expect these days.
Friday marked the biggest option expiration day in history. Did it have much impact on the markets?
Well, you had a lot of volatility within the day, which is what you expect when you've got these big option positions, and then everybody in that last 5 minutes starts to unwind what's left in the way of positions. So, you know, and the volatility in the last 5 minutes and the close was really something. But the bottom line is that the Dow was marginally up on the day. The S&P is marginally down. The week as a whole, when you look at it, is pretty much a quiet-looking week. When you look at the bar that we put in here, there was a little bit of a correction into the middle of the week. I guess that was Wednesday, Thursday. And when we take a look at our normal seasonals, and in particular the years where you were the first year in a presidential cycle, you look to see how much of a rise there is coming out of not only the election in November, but how you do as you move through January. And this year is a classic. Good strength with the support now having been around January the 4th. I had a small pullback there. And just one minor pullback as we hit the end of January. The Dow got down to about, 30,000. And a nice turn from there off of a good oversold low. And going forward here as we move through the end of February into March, we want to see the momentum continue higher, but the pace can be very, very slow. Doesn't have to have the explosive activity in it. But as long as the corrections hold like they did on Wednesday, Thursday, and we look at a 13-day moving average as the support there, as long as that holds, it can continue to just grind its way up. But any violation of that support, and I think you could easily be looking at a Dow dropping by maybe 1,000 points or so.
Bitcoin, what's the story there?
Bitcoin all-time highs, and this has really been a nice trade for us. Back in October, when we were sitting down under 12,000, it looked as though it was prepping for a good run. We put out a recommendation, and then into the middle of January, there was a nice correction from 40,000, and when it got down to 29, that kicked in with our oversold signals. And we've been looking for this leg to get up to a minimum of 55,000, which happened as of Friday. So from this point forward, initially now, we don't want to see corrections that are any more than 50% from that low we put in late January at 29,000. Now, if it continues to push higher from here, then we won't be allowing 50% corrections anymore. We've got some higher or lower percentage levels that it will be allowed to come back, and that will be determined based upon the strength as we move forward from this 55,000 level. But so far, the trend has been good. The pattern out of here, this consolidation since 2017 high, where we had that big correction down to 3,000 and up again, that whole structure is the same so this is the third time now that we've seen it, and we saw it in 2013 as well. The whole measurement of this thing is a minimum of 120,000 when we look at it on a semi-log chart. So there's lots of potential here, and there's so many products within this whole Bitcoin and sector that there's lots of items to look at. But Bitcoin itself for us has been a reasonably easy one to make the calls on, not day by day, but overall looking for the big patterns, because that's where the really big money is made in this type of a move.
Bob Hoy mentioned on Friday that one of the world's major funds, investment funds, is now taking a look at Bitcoin, and they said they're getting into it a little bit. Does that tell us anything about the markets?
Well, I mean, yeah, it's clearly as big funds or institutions start to move into an item, but first of all, by the time it becomes they are forced to do it because it's becoming an integral part of what's happening within the financial system. So they get dragged into it, in some cases not wanting to be there, but being forced to go into it. So that's one thing. But once this money starts to move into a product or sector, then this becomes a long-term move, and you'll get volatility. But I don't know what Bob had, but in terms of my analysis on this, I continue to look for more and more of the same. And it's interesting if we take a look at the other market that's been really good to us here has been the bond market. We were at the top of the long-term bull market channel in bonds back from 1982 up until March of last year. Beautiful channel, kissed the top of it then, and a couple of months ago it broke down, and we ended up with we've got a target of 161 for the bonds, down to maybe 159.5, and with all that's going on in these riskier products continuing to excite people, it's meaning that the safe haven items, the bond market, the gold market, are coming out of favor. And when you get that type of action in bonds, where you've got big commodity moves and the risk action is on, the institutions over time, they just put a lid on every rally, and as it starts to gain some momentum to the downside, you start to see a panic kick in. And the bonds closed off the week at 163. We're starting to get into that panic mode as far as the bond break is concerned. And as I say, our target's around 161 or lower for this part of the move. And I'll be looking for a pretty decent bounce from there. The TBF ETF, which is the inverse on the bonds, we'd recommended call options on that back in January. Those things are up 2.5 times at this point, so it's been a bit of a home run move for that one.
Has crude oil moved much?
Crude's found a level here up at this $60 to $61 level. And I don't have any excesses up here. We had some small overbought readings as it progressed up, but there's nothing dramatic up here right now to say that it's in need of a big correction. I don't have a big handle on that one. Prefer to just leave it, on its own. When we take a look at other industrial commodities, you take a look at the base metals, is copper up at 406. when it made that first run into the mid 370s, like 375, 376, it got some good overbought readings. I thought we could have a decent correction, but it was fairly mild. I got a nice buy signal on the corrective low, but didn't believe that it was going to hold. And that's the one thing about the market. It's always teaching you lessons. So in this case, the correction was very mild. It was a flat correction. Had two waves of selling, but never got any big selling pressure in it. Seeing the same type of thing over in platinum, as being more of an industrial commodity than what you've got over with gold, which is out of favor right now. Platinum's doing really well, and then there's lumber. This lumber price, $1,000 board foot. Never ever seen numbers like this before. And we were questioning, is this going to slow people down in building homes? Well, I don't think so, because lumber is still not that major part of the total construction cost. It may hurt people who are building tree houses, because there the product is 100% wood. So, kids may not be looking at as many of those being built as they might hope for.
Would that be high enough to encourage them to reopen some of BC's closed lumber mills?
Good question. One of those things that takes time, and at $1,000, there's got to be some opportunity there, but you don't just hire everybody back and have the mills up and running quickly. You got to get the logs down. Well, you got to cut them, you got to bring them down, etc. And be nice if it did, but I wouldn't hold my breath on that right now. But eventually, prices of any commodity, when they get high enough, will bring on additional supply. And maybe in the case of lumber, that might be around the corner. But say for me, I don't see it right now. I would just, you enjoy the moves that we're seeing in these forest product companies. They're having some pretty good runs at this point, and I wouldn't be looking to fight those ones as of yet.
Ross, thank you so much for being on This Week in Money.
Always good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at ChartsByRoss. We go to Japan to speak to James Corbett next on This Week in Money.
Always consult your investment professional before making any investment decision.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is James Corbett, publisher of thecorbettreport.com. He's speaking to us from Japan, where he has worked and lived since 2004. So long you've kind of lost contact with your Calgary Flames.
Indeed. I don't know what's what in the NHL anymore, so I think I have to revoke my Canadian citizenship. I actually have a mouse pad in front of me with Iginla, Kiprusoff, Jelena, and Conroy jerseys on it, which shows how long it's been since I've been following the Flames.
Yeah, all Hall of Famers.
Yeah, I guess so. I'm an old man now.
James, what are you currently working on?
I am currently working on a report about bioethics and the new eugenics, which is particularly timely given, obviously, the state of the world and what we're all talking about and thinking about these days. And I think this is a subject probably on zero people's radars, but I think it should be on people's radars. Essentially, the confluence of the academic study of bioethics, medical ethics, and how that is increasingly determining government policies on things that will literally mean life and death for some people. And I think a lot of people don't know where bioethics as a profession really started, how it came to be, and the crazy kinds of things, including post-birth abortions and other euphemisms for infanticide and other things that are being argued at the academic level right now. And I think people need to know about this. So I'm working on a report about that should be up in the next couple of weeks.
Well, sure. I mean, I look at the 1920s and 30s when states and provinces passed laws allowing the sterilization of mentally ill people with the fear that perhaps they would pass their genetic defects on. And some provinces and states, I believe, still have that on their books. They haven't even removed it.
I believe in my home province of Alberta, it was on the books until at least the 1980s, if not the 1990s. And obviously, I don't think is enforced these days. But yes, it is an extremely relevant part of history that we should be thinking about, especially as our technology for doing medical interventions at the genetic level continues to increase. I don't think we've really advanced. In fact, perhaps we've even let that conversation atrophy because we haven't been having it as a society very much lately. And I really think people need to be looking at this subject, especially as we're entering this age of potential forced vaccinations and other such ideas.
Mm-hmm. So, have you found anything that surprised you?
I suppose not that it surprised me, because I've been looking at this subject for a decade now, but the more I dig into it to look for specific bits and pieces of this puzzle, just the more apparent it becomes how much the eugenics ideology, the idea that there are certain people whose genes better fit them for the purpose of ruling over others, how much that ideology has really formed the basis of modern bioethics, to the point where I think a lot of people working in that field today aren't necessarily card-carrying members of any eugenic society, but they are so influenced by those ideas that they don't even understand them as being outrageous. And one example that I'm looking at as we speak, I'm just researching about a 2012 paper that was published in the Journal of Medical Ethics about post-birth abortions. And the authors of this paper were flabbergasted, surprised, shocked to find that when their paper was picked up in the popular press and was reported on internationally, and even The Guardian and other mainstream media like that was saying infanticide is morally wrong, you should not be afraid to say that, or something along those lines. These professors were shocked. Why is the public so upset about this idea? We're just talking about killing babies. There's nothing wrong with that.
It seems to me when German troops were accused of doing that in the First World War, it was one of the reasons why the U.S. got involved.
Exactly right. Yeah. Babies on bayonets, and in fact, one of the best-known bioethicists today, Peter Singer, specifically referenced that in his own book called Practical Ethics, where he was talking about it's not so wrong to kill babies, even though people think so, and they'll hark back to that imagery of babies on bayonets from World War I as an example of why people feel that it's wrong, but they're wrong about it being wrong.
Mm-hmm. What are you hearing? Let's switch to economics from eugenics. What are you hearing on the Robinhooders and the GameStop short squeeze?
Well, I haven't been following every twist and turn in this story, but the latest that I know is obviously the CEO of Robinhood, Vlad Tenev, is set to testify in the investigation into what happened this week. So whatever is going to play out in the court system will play out from here. But I note that his defense, the CEO of Robinhood's defense for why Robinhood stopped trading on 13 heavily shorted stocks that were being bought in record numbers in the past few weeks was because they didn't have the collateral to back up those purchases. They just didn't. So they couldn't. They couldn't allow those trades to go forward. So their hands were tied. And then he went on to say, as soon as the emails announcing that decision went out, the conspiracy theories started coming. So my phone was blowing up with, how could you do this? How could you be on the side of the hedge funds? And essentially he's going to play the oh, poor me version of this, which belies the fact that, in fact, Robinhood is essentially just the front-facing part of Citadel Capital, which is using Robinhood's purchases. They have a direct line to essentially affect the Robinhood trades in order to front-run them, essentially. Although, of course, that will come out in the courts, I'm sure. But at any rate, that's the scam that has been going on that is kind of unraveling right now. I think what the entire incident really demonstrates for me, I think the real meaning of what's going on is that these markets are fundamentally rigged against the average mom and pop investor. They weren't, Robinhood and other things like this were never meant to, suddenly now everyone can trade and everyone is in on the game. No, this is a rigged game, and they are basically exposing that right now. And it is rigged in favor of the big hedge funds and the big billionaire investors, and against the average mom and pop. And whenever the average retail investor comes along to actually influence anything, they're just going to change the rules.
Do you think these short squeezes will cause regulators to change the rules?
I think it could result in that, but probably not in a way that ultimately is going to benefit, again, the average retail investor, although I'm sure it will be spun that way. But I think what has been shown quite clearly is that even regardless of whatever rules are in place, again, always with just the best of intentions, they ultimately end up acting against the average person having a real effect on the system. And one example of that is, of course, Robinhood has to have the collateral in order to back up the purchases of stocks that they're making, but they didn't have the collateral, so they can't let people buy those stocks, which just goes to show, ultimately, this isn't really the way for the average person to get involved in these markets. No, you have to be a billionaire hedge fund CEO in order to really be able to make significant changes and in actual trading volume. And as I say, I think the ultimate changes that are going to come from this is going to be more blocks on people ever being able to do something like this again, rather than actually shoring up the system so that it's in some way fair for the little guy.
Which market sectors are you keeping a close eye on right now?
I can't say I'm keeping a close eye because, as I say, I'm neck deep in bioethics at the moment. Obviously, I think pharmaceutical manufacturers and vaccine production manufacturers are stocks that people might want to be watching. And I don't mean that in the sense of, hey, here's a great buying opportunity, although I suppose it means that. But I think it gives a flavor of the direction that the economy is heading when we are so concerned about the health factors that I think these companies will be essentially, especially ones working in emerging technologies like the BioNTechs of the world, etc., the working with the experimental mRNA injections, will definitely have a lot of room for growth. And I don't think that means anything good ultimately for the general public. But at any rate, that's certainly a market to be watching. Another one, of course, is the energy sector, which always important, but particularly important when, for example, much of the United States is in a deep freeze and power outages, rolling power outages happening across Texas and other places right now. I think all eyes are turning towards energy markets. And in fact, even here in Japan, as we're going through a little bit of an Arctic snap here as well, and combine that with an already overstressed power grid that has just been further stressed by an earthquake that took place near Fukushima in the past few days. Apparently, all of the power grid is still managing to hold up and in place, but for how long, and is that sustainable? It's happening all around the world right now, so I think energy markets are extremely important at the moment.
Well, I've heard that if everybody switched to electronic cars in the near future, the power grid just isn't built to handle the load. Yes.
Among many other factors around the logistics of this monumental switchover, including the fact that the fundamental question, would that actually reduce any of these fossil fuels that we are told is the reason we all have to switch to electric power? Would it actually be a net positive or negative even in that situation? But as you say, yes, the power grid is not meant to have that kind of load on every residential house everywhere. So this might be part and parcel of a much broader transformation that is due to take place in the coming years, at the very least decades, but probably in the coming years, as more autonomous vehicles get put onto the streets. There really is the question of the fundamental changeover in our concept of everyone owning their own car or perhaps multiple cars. Why would you need to if there are all these autonomous vehicles that could just be set to roam around at all times, and like Uber or Lyft or whatever, you just order one of these autonomous vehicles, it shows up at your house and it takes you to where you need to be. Why would you need to own a car? Why would you need to have a residential charging port, etc.? So this problem may come with its own solution, which is you won't own your car in the future, which sounds an awful lot for people who are paying attention to ideas that have been proposed at the World Economic Forum in Davos, for example, where, as people may have seen recently, a talk that went around a few years ago from I believe, a Danish politician talking about you won't own anything in the future and you'll love it. And this is essentially the idea that people are looking at. No, you won't buy things. You will buy services in the future, and one service may be a ride to wherever you need to go because you don't need to own a car. So, yes, I agree. I think fundamentally the idea of every single residential unit having a charger for their car the power grid is not set up for that. It couldn't function. So how could this function? Well, it could only function if we're not all owning cars.
Are the lockdowns and push for vaccines part of the Great Reset?
They absolutely are. I don't think it's a necessary part of the Great Reset, but it certainly helps this agenda. And for people who don't know what the Great Reset is, they may have only listened to the mainstream establishment press and decided that this was a quote-unquote conspiracy theory, but quite a conspiracy theory, I suppose, that the fact that the Great Reset, which is being forwarded by the World Economic Forum, has its own website, its own podcast. There's a book written by World Economic Forum President Klaus Schwab talking about the need for a Great Reset. There's ongoing symposia, Prince Charles and others talking about the need for a Great Reset. So this is not a conspiracy theory, in case anyone needs informing about that. If they do need to be informed about that, I did put out a podcast a few months ago about your guide to the Great Reset. Just type that into my search bar, not Google, because they are algorithmically limiting searches to sites like mine, but you can find it on my website at CorbettReport.com, where I talk at great length about this, not from some conspiracy theory perspective, but from the words of these actual individuals, Klaus Schwab and others, talking about this. And lockdowns and mandated vaccines are a part of the switchover in the economy, in society, even down to the genomic level of what humans are and what they will be as we start to accept the transhuman upgrades that are part of the fourth industrial revolution. I know this sounds crazy to the average person who hasn't been listening to the actual pronouncements of these world misleaders in recent years, but I'm not the one talking about this. These are some of the richest and most powerful people in the world talking about how in the very near future, brain chips and other sorts of ways of upgrading the human condition are going to fundamentally change everything, let alone the automation that's going to replace all of your actual meaningful, productive work. So we're going to have UBI and all of these, again, far-out-sounding ideas that are, I think, a lot closer than people think. And lockdowns, the locking down of the entire economy, the push for forcing or at least coercing people into medical interventions that they do not consent to, these types of things are, I think, steps along that path towards the Great Reset.
Would that mean implanting chips in people when they're born so the government can keep track of you, and that's supposed to pay your bills and keep track of your educational record and so on?
I think that would be the long-term vision for this plan, but it's important to understand there would be many intermediate steps before we get to that point. And as many people have pointed out, why do they need to chip you when you carry a computer around in your pocket everywhere you go? And I think, at least at this point, that is true. I think some people would at least still have that fundamental ickiness factor towards accepting the brain chip implants, although that is being broken down by cool people like Elon Musk. Hey, he's got Neuralink, and he's going to take a brain chip as soon as it's ready, so maybe I should too. That is coming. But in the meantime, yes, of course, this can all be done via your smartphone, which everyone dutifully carries around everywhere they go, and which will, by the way, increasingly be needed in order to display your proof of vaccination, which the COVID passes, the passports are coming. And they're not just going to be for international travel. Eventually, it will be for outdoor events of various sorts, or accessing public buildings, or eventually, in order to go shopping, you'll need to prove your immunization. Well, it'll all be there on your smartphone. And, oh, by the way, why don't we just put your entire digital identity on there? Why don't we make sure that it's the only way you can pay for anything? And once every single point of transaction and interaction with other human beings is taking place through these smartphones, the next logical step will be simply to implant some sort of chip into the body. It doesn't matter if that's a year away or a decade away or a century away. That is the trajectory that we're headed on. So when people try to debunk the straw man of, oh, you crazy people talking about brain chips, they're not going to do that. Well, maybe they aren't, but at any rate, we are heading towards that digitalization of the entire human experience.
We'll have more with James Corbett when This Week in Money returns.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYVresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with James Corbett. James, we're hearing that the COVID-19 virus has not been isolated. What are you hearing?
Yes. Well, look, let's put it this way. I'm not a microbiologist, so I'm going to leave that to people who are actually qualified to talk about this. And I don't just mean leave it to the experts, because unfortunately we've seen what that means, but to people who have actually been studying this in greater detail. Yes. Has there been an actual isolation of SARS-CoV-2 in its entirety? No, but have people claimed to have sequenced it from various sequences that they have discovered in people that they have managed to isolate from various people? Yes, that claim goes around. I'm not going to adjudicate on that claim, but I think that like anything else, once you see how the sausage is made, you probably have a lot less faith in eating that sausage. And I think that is probably applicable as well to our state of our understanding of the microbiology of what's happening here, and how is it that we know what SARS-CoV-2 is and what it looks like? Is there a virus that they have isolated and sequenced in its entirety, and that they can somehow magically scrape from your body and see in its entirety every single time? Is that how this works? Well, it certainly is not. And the more people find out about, for example, the PCR testing, which has become the gold standard apparently for diagnosing whether someone actually is positive or negative for SARS-CoV-2, is problematic to say the least. And again, you don't have to go on a conspiracy theorist limb for that. You can look to people like Tony Fauci there in the United States, who has declared, yes, anything over a 35 cycle threshold for the PCR test, i.e. amplification 35 times or more, you're basically just picking up dead nucleotides by that point. So it's not a reliable test for positivity, which is why the incredibly high cycle threshold in some countries, 40 or even more cycles have been used up to this point, is now by WHO guidelines being reduced. They're saying, well, now you need to have a PCR test no more than 35 amplifications, and you have to have another form of diagnosis. And wouldn't you know it, lo and behold, suddenly the positive test rates is plummeting in the United States and elsewhere right now, because these new guidelines presumably are taking effect. So, as people have been pointing out for a long time now, what we are experiencing is less of a pandemic than a case-demic. And the cases are measured by a faulty test that is admittedly faulty, and that they are changing the guidelines for, even as we are in the midst of this so-called crisis. So there's so many different points to be made here, but one of them absolutely is that we know a lot less about this virus and what it really is and how it is being tested for than I think anyone really wants to admit.
Could the push for vaccines and the wearing of face masks lead to a mass extinction event?
Well, that is a rather grandiose claim, and just on the pure hypothetical, could it certainly could. There are possibilities for that. I'm certainly not claiming that that is necessarily how this plays out, but it is a possibility, and people need to know about that possibility and how it comes about. And one of them is to examine a phenomenon in vaccines, specifically that in coronavirus vaccines, that enhances susceptibility to viral infection. And this has been noted by researchers, even completely 100% pro-vaccination people like Peter Hotez, who is 100% involved in and in line with the current push for coronavirus vaccines, has admitted that in the past, previous coronavirus vaccines have specifically had this problem where people who are vaccinated for coronavirus, when they are challenged by the actual wild variety of the virus, have a severe adverse events, including people who have been killed in some of the research programs in the past, like with the respiratory syncytial virus, the RSV virus vaccine that was being worked on in the 1960s. This is a known thing that has happened in various vaccines in the past, specifically in coronavirus vaccines. So disease enhancement is one possible outcome for the current COVID vaccines. There hasn't been any demonstration of that yet in the medical records, or at least in peer-reviewed published literature, but part of that, I would say, is because not even the clinical trials for these vaccines that have been emergency use authorized have completed. These trials are still ongoing, so technically every single person who is taking any of the COVID vaccines, whether that's Pfizer or Moderna or Oxford AstraZeneca, are involved in ongoing trials that we do not know the results of, and it's very much a possibility, although I'm not claiming this is the fact, but it is a possibility that these vaccines could actually enhance people's ultimate disease development after they are exposed to the wild variety of the virus. And we just don't know that yet. So there are scenarios in which the current vaccination drive could lead to an even worse pandemic and potentially an even more deadly one. Again, I don't know. I can't say that with any certainty, but it's at least a possibility.
Could the profitability of vaccines cause safety to be ignored?
I think that's self-evidently obvious to anyone who presents even just a short fraction of a second of thought to that idea. The fact that governments have been lining up to buy hundreds of millions of doses for their citizens before these vaccines have even been developed should speak something to the fact that, yes, there is a profitability factor in here. Now, there are a million different scenarios and different factors to take into consideration, including the particular contract that various countries are signing with various manufacturers for various doses and how they are to be supplied and under what conditions and when is profitability allowed and when are these vaccines being purchased at cost, etc. But one example of that would be I believe, I'll have to look this up, but I believe it was a contract between Oxford AstraZeneca and Brazil that was, if not leaked, at least reported on by the Financial Times, which included a clause that allowed the vaccine manufacturer to declare when the pandemic is over. In July of this year, they will be able to declare whether the pandemic is over or not, and based on that declaration, they will then be able to make to sell the vaccines for profit, as opposed to selling them at cost. So those types of variables are being hidden in clauses, in agreements that the public are not even privy to, let alone even think to look at for themselves. There's just such a mess with regards to all of this that obviously the profit factor has to be at least considered, even by the least skeptical of the public, as one factor that goes into the question of whether or not these vaccines are being improperly rushed to market.
Are we likely to see vaccines for everything going forward?
If not everything, at least certainly a greater amount of vaccines for a greater variety of diseases. Anyone who thinks that this is only about coronavirus, SARS-CoV-2 specifically, and that it will end whenever this pandemic is declared over by the vaccine manufacturers themselves, is living in la-la land. Obviously, this is going to be an ongoing concern for years, if not decades to come, and it will not just be limited to coronavirus. Every time there is any sort of Ebola outbreak or anything anywhere in the world, you better believe there will be vaccine development. And in fact, we have just seen in recent weeks, for example, Bill Gates posted up to his YouTube channel a video talking about pandemic emergency response units, global pandemic emergency response that will be necessary, and he likened them to global disease firefighters. And you can watch the video for yourself where he's moving people around on this big globe, or this big map of the globe that he has spread out before him, in a very interesting imagery, let's say, for people who think that Bill Gates may be more powerful and wealthy than even he lets on. But anyway, he's literally moving people around this board and saying how we'll have to rush people in here and there to develop vaccines, deploy them, and make sure that the disease doesn't spread. Yes, you better believe that there's going to be a massive increase in vaccine funding and development and deployment in the coming years, and not just for coronavirus.
Why do the powers that be find it necessary to track people?
Control over the population, the basis for that control is going to be knowing everything about that population. Knowledge is power, and I think that's manifested most obviously in the way that the government wants to see and be a silent participant in every interaction and transaction that the public has. I've been doing this for 14 years now at CorbettReport.com, and I can remember back when I first started, and I tried to point out the documented and on-the-record ways that the NSA and various other spy agencies were spying on the public, was poo-pooed as conspiracy theory. For some reason, whatever reason it is, Edward Snowden's whistleblowing on that issue caught on with the general public, and now it is no longer conspiracy theory to say that, of course, all our emails are being intercepted and read and stored. But it's not a big deal, because don't worry, they're just looking for the bad guys. But at any rate, it's no longer conspiracy theory. But yes, obviously, the government has a vested interest in knowing everything it can about its population in order to better control that population. This actually goes back to an ideology that was developed in the 1920s, really propounded and became a card-carrying organization in the 1930s known as Technocracy, Inc., which had a grand vision for the world, not a world of governments that are going to be making public policy, but of technicians and scientists and engineers that were going to be determining exactly how much energy was going to be needed to produce everything that an economy needed in any given year, and then was going to divvy that up as energy credits that it would hand out to every citizen, and people would use those energy credits as money. It sounded like a ridiculous, crazy, wild-eyed idea in the 1930s when it really gained a lot of popularity, not least of which because it required a live, real-time accounting and of every single transaction in the economy, everything that was purchased, how much energy it took to produce that thing, so that the technicians and engineers could then calculate the overall energy needs for the country. It sounded ridiculous 90 years ago. It's very much not ridiculous at this point. It's, in fact, very feasible at this point, and we are already starting to see the ways that we're being positioned to accept a digital currency in the future, where every single transaction will be monitored in real time by the government and any financial body that comes in between you and whoever you're buying from. So that's becoming a feasibility, and that control is predicated on the knowledge of what people are doing and what they're buying and who they're talking to and what they're talking about. That's just one way that this knowledge can be used to, in the minds of the technocrats, better govern society, but I think more realistically, better control society.
Is China close to that, using face recognition and negative citizen points on Facebook?
Yes, absolutely. The social credit score, the facial recognition cameras that are tied into people's digital wallets, essentially. There's an incredibly large degree of transactions that occur on digitally already in China, and they are probably going to be the first nation to really deploy an actual national digital currency, as they're working on the digital yuan, and it's being trialed. The last I read, anyway, it's being trialed in China right now. So that is the vision of this technocratic grid. But to say that it's only happening in China would be absurd. Of course, it is happening in Canada and the United States and Japan and everywhere else. It's just at different stages of development right now. It's just most obvious and evident in China. But I invite your listeners to note the propaganda when it comes specifically to the China question. There will be no end of editorials pointing out what the evil Chinese communists are doing to track and control their population, but it will always be tempered with a little bit of, wouldn't it be nice if we could do that here? And the most obvious example we've seen of that in the past year has been, well, look at what those horrible Chinese are doing to lock down entire cities and put people under lock and key and basically control everyone's movements. but wouldn't it be so much better if we could do that here? Maybe we could get rid of this case-demic that's going on right now. That type of propaganda is everywhere apparent.
In Canada, the Privacy Commissioner found the police had illegally used facial recognition software hundreds of thousands of times across the country. Nobody was fired. There's no penalty for doing it. What good is it for saying it's illegal if there's no penalty?
Well, this goes to a fundamental point that the laws are only as good as people's knowledge of them and ability to enforce them. And I suppose the enforcement side of it comes more at an organizational level. But I think there is a societal, a cultural factor to all of this. And another example of this are the people who are being ticketed, for example, for daring to feed the homeless or clothe the homeless in the midst of a pandemic, or people who dare to protest against lockdowns because they're obviously defying the lockdown by protesting against them, or churches that dare to hold a church service during a declared pandemic, etc. Those types of things are being enforced right now, even if they are not technically legal. And you have, as I recently talked to, for example, the Justice Center for Constitutional Freedoms based in Calgary, that is fighting a lot of these laws in BC and other places, that they are actively engaged in the legal battles to try to get some of these tickets and other things that are being issued right now overturned, because they are expressly unconstitutional, illegal. They should not stand. But it is largely a societal factor. If enough people go along with it, then the government will essentially be able to get away with anything that it wants, including illegally using facial recognition.
Well, a BC Supreme Court judge has turned down an injunction application against 3 local churches in the Vancouver area that were holding services. So somebody, I guess, still is checking the Constitution now and then.
And exactly right. And I believe it was the Justice Center for Constitutional Freedom, so where I was reading about that case, and they're still ongoing with their lawsuits against the BC government.
From the outside looking in, how would you describe the governments in Canada?
It is very disheartening, I must admit. As a Canadian, I am ashamed of the way that the Canadian public has reacted. I'm not surprised to see that, for example, Trudeau and the Canadian federal government and the individual provincial governments would try to extract as much power over its citizenry as it has in order to basically better control the population and tell them when they are not allowed to leave their own homes and under what circumstances and how many people they may or may not consort with in their private lives. Of course, every government throughout history has dreamed of the ability to essentially be able to order their populations to be compliant and to follow orders, and here is the perfect excuse for them to take unprecedented levels of control in micromanaging the individual daily activities of people's private lives. So it is not surprising, as I say, that governments would attempt to use this power. It is only disheartening for me to see that so many of my Canadian brethren are apparently in accord with this, that they do not see the fundamental abrogation of fundamental human rights that is taking place right now. And of course, it is during times of declared emergency when you are being told that, well, these orders are in place to protect you, and anyone who defies them is an evil person who is trying to harm you. Of course, that is exactly why these types of fundamental rules, whether they're constitutionally enshrined or not, are in place. It's because these represent the red line that shall never be crossed in any declared emergency. And if we let go of that, if the public does not push back against this, then I really think there's no end to where this will go. Of course, governments will continue using this as an excuse to implement any sort of transgression against basic human rights until such time as the public starts pushing back. And I fear that the Canadian public has become docile and compliant enough that they will not start pushing back against this until it is too late. So I am looking for and encouraging signs of people actually challenging legally and in whatever way possible these types of orders, but I'm seeing very little of it at the moment, unfortunately.
Well, having done it once, ordering people to stay home and wear masks and so on, will the government use less of an excuse next time to tell people you can't go out and there's curfews?
Yes, I think that's precisely the point of what we're living through right now. This is a precedent-setting time, and the precedents that were set in past pandemics, for example, the 1918 pandemic, etc., are not really relevant to a 21st century society that is primarily online and we're primarily digital, and the world has changed in so many ways. And I think what we're experiencing right now, is setting the precedent for all future declared health crises of any sort, so that, well, look, you did it last time, so now we get to do it this time. And that is the worrying part of this, again, is that what is happening right now truly is the fight for the precedent that will go forward into the future. And as I say, you better believe this does not end with SARS-CoV-2 and this particular declared case-demic emergency. It will be every year for the rest of your life the new strain of some new virus that's passing around, or eventually just the regular old flu or whatever. How dare you try to spread that flu willy-nilly? You have to lock down, you have to wear a mask, you have to be quarantined in a government-approved quarantine facility and pay $2,000 for 3 days stay, as they're trying to do to Canadian residents returning to Canada right now. Other such incredible things that would have been unthinkable even 14, 15 months ago are now becoming the precedent, and that is the most worrying part of all of this.
We've been hearing the Biden administration is an illegitimate government. Could this already be factored into the financial markets?
I think the financial markets are less concerned about what particular political puppet is occupying the Oval Office and much more concerned about the Federal Reserve in the United States context, specifically the Bank of Canada in Canada, obviously. The financial markets have been so decoupled from actual productive economic activity certainly for the past decade and a half since the 2008 financial crisis. They have been so dependent on central bank policies that I think that is truly the driving force of markets these days. I've pointed, for example, in the past to research that found that 93% of the growth in the U.S. stock markets from the 2008 crisis until 2016 was directly attributable to the Federal Reserve. Other such studies, I'm sure that could be updated for 2021. At any rate, an incredible oversized influence on these markets is coming from the central banks. So I think that is really the fundamental question that the financial markets are pricing in, to the extent that they're pricing in anything even remotely related to reality at this point.
Is the Biden administration good for China?
Yes, I suppose so, yes. But again, it's part of that broader context of what I was referring to before, that China is essentially the model for the technocratic state of the future. The only question is what accommodation various leaders will or will not have to that vision and the way it is implemented. I don't suspect that, barring some sort of actual hot war, that China will literally be in charge of the United States. But essentially, the Chinese vision of governing a compliant and docile citizenry that is completely lorded over by facial recognition technology and social credit scores and all of the other technical googads of tyranny is the vision that essentially most rulers have at this point. And I'm sure the Biden administration will play into that to some extent. They will talk tough to appear to be opposed to the Chinese government, but they will be essentially following the Chinese model in how to govern society. And that to me is the more worrying part of this, not the Chinese per se, but just that ideology, the idea of essentially the technocratic vision of society that unfortunately is certainly not unique to China.
China is threatening, or has put out a trial balloon suggesting that they could limit the export of rare earths, and they're the number one supplier on the planet. Is this a power play over the U.S. because they feel the Biden administration might be weaker?
Well, again, regardless of whatever the presidential politics of this might be, I think it plays into the broader point that we've reached in the deliberate and pre-planned offshoring of not just American manufacturing ability, but essentially global manufacturing ability to China and increasingly to other places in East Asia and other areas of the globe. The deliberate offshoring that has taken place over the past not just few months, not just few years, but literal at least 2 decades. You can extend this back, really 3 or 4 if you go into the deeper financial ties of all of this. Something that I laid out in my podcast in an episode called China and the New World Order, where I believe it was 5 or 6 years ago, maybe 7 years ago now, I was talking about the very careful laying of the financial infrastructure, which eventually carried over into the the research and development and the manufacturing infrastructure being offshored to China specifically to build them to this point where they do. They can make credible threats like that. We will not ship our rare earth minerals, and we are now the largest holders of either the rare earth minerals themselves or at least the mining operations for them in various places around the globe. There is a credible threat there now, and that, again, has not happened by happenstance, and it certainly has not happened in the last few months.
If continued chaos is the plan to destroy America, where do you think the safest places to live will be going forward?
It's a very good question, and one that I think is inherently unpredictable because, for example, if you had told me at the beginning of 2020 about what was to develop over the course of the past 13, 14 months, I would never in a million years have guessed that Japan would end up being one of the countries that locked it down the least and had the least coercive restrictions or mandatory restrictions on people's movements and behaviors, or that somewhere like the United States or Canada would be locked down to a significantly higher degree. I would never have predicted that, and there's many different factors that go into that. So I don't think I could predict in some whatever chaotic events we're very likely to see playing out over the next decade what pockets of relative freedom will be enjoyed in what particular areas of the globe. There is usually the school of thought that in the lesser developed countries, you will essentially be able to escape the control grid that is developing because there will be less access to digital services or less reliance on those services. But even that old verity, I think, is collapsing as more and more of the population of the globe has access to cell phones and increasingly smartphones that will be connected via Starlink or other sorts of innovative satellite links to the internet, and everyone is essentially being put online and being having their biometric details stored in the grid. So again, could I predict what particular part of the globe is going to enjoy relative freedom? I'm not sure I could, and I'm not sure that's really the point, because I don't think looking for some tiny pocket where hopefully you can eke out some sort of existence as the rest of the world collapses is really the best way to approach a situation like this. I would be much, much happier to see more, for example, more Canadians standing up for their rights in the place that they live to stop this chaos from happening.
How would you save the world?
Oh, what a tall order. And my actual answer to this is that there is no central plan for freedom. There is no one way in which to order the world, to organize the world, to control the world, and it is that mentality that is truly the core of the problem that we are facing. The idea that there is a small group of people, because of their knowledge, their experience, their sagacity, whatever, who are in a better position to tell other people how to live their lives. I am fundamentally opposed to that idea. Central planning is always a bad idea. I am all about the idea of letting people live their lives in the way that they see fit, as provided that that is a voluntary situation that they find themselves in, and they form voluntary communities with others around them who want to live in a similar way. I'm perfectly fine for that to happen and for people to live in whatever organization and under whatever system they want. Again, as long as it is voluntary. And I wouldn't even say that one particular form of community is going to thrive over all the others in that scenario. Even the concept of what does it mean to be productively happy and thriving is subjective, and different people will have different situations that they will find happiness in, and I'm happy to let them do that and experiment and find what works for them and what doesn't. I would not save the world. The only thing that I would do if I was in charge of everything would be to scrap the idea of central planning altogether and to allow people the freedom to voluntarily interact in the ways that they want.
Are real estate bubbles forming around the world, and can they be sustained?
It's a good question that's dependent on the circumstances, because a bubble is only a bubble if the actual value of what is in question is not reflective of the rising prices. But the rising prices can be a number of different things. There can be a number of different factors that go into that, not only the scarcity of the underlying good, in this case actual physical real estate, but also the declining value of the paper promises that are increasingly being printed by the bucket load by governments around the world as they rush to fill the void of the economic doldrum or calamity that we're living through with those paper promises. So, will the land, in fact, actually be as valuable as the bubble is making it out to be? And the question may indeed be yes, may be answered with the word yes, maybe. Again, it depends on how all of this plays out, but I could envision a future in which actually having access to land that you own, at least in some meaningful sense of that word, could be more valuable to people than other things that they value at this point in their lives. Again, that is a question of the chaos that we do or do not see play out in the coming years.
The Dow is over 31,000 points. Is that a good sign for the economy this year?
Well, actually, not only is the Dow over 31,000, but the Nikkei 225 here in Japan has just topped 30,000 for the first time in 31 years. Yes, not since the popping of the crazy bubble of the 80s has Japan experienced such a record market high. Yay! Wow, this must be good news, right? Japan's economy is booming. So is America's. Hey, why not? Really? Is that truly happening? Or is that just a reflective of the funny money that is being pumped around in the markets right now? As I have said many times over the past several years, I think it's more the latter than the former. I think that what we are experiencing right now is just another form of the central bank liquidity that is being pumped into markets around the world, and they are buying up stocks like there's no tomorrow. I do not think that is reflective of actual underlying economic productivity. Do you think the economy is in a better position now than it was, say, a year ago, 2 years ago, before all of this pandemic pandemonium and the shutdown of the world economy and the craziness that we've seen? Of course it isn't. So what is this really predicated on? Is it based on some sort of incredible economic activity that's happening right now? Or is it based on paper promises that aren't worth the paper they're printed on? I'll let the listener decide what they think about that. I certainly think we are living in the reality inversion bubble right now, where the economic markets tend to boom when bad news comes because they know that central banks will fill the void with their funny money.
Could we be in for a political revolution around the world that removes corruption from all levels and sectors of government?
Wouldn't that be nice? We are living through revolutionary times. I think everyone understands that to some extent. Clearly, the status quo cannot stand as it has stood, and we are seeing moves on the geopolitical scale, on the economic scale, on the domestic political scale, on the societal scale that we would never have seen before, certainly not in my lifetime. I would say you would have to go back to the Second World War to see a similarly globally disruptive time in the world, and that was essentially the order, the Pax Americana, so-called, that formed around that post-war era is clearly coming to an end. What that means specifically, of course, is not yet decided, is up for grabs, but there is clearly a revolutionary moment that is happening right now. The question is, will it be directed towards productive or destructive ends, and by whom? Again, those are questions in progress. It depends on people's understanding of the forces that are shaping the world right now, the Great Reset and other such things that are, again, not a conspiracy. They're completely out in the open. But will people actually take their time to inform themselves of these debates that are happening right now and the way that the political misleaders are seeking to direct society? Or will they let it simply happen to them? And if the latter, then I think we're in for whatever comes of that, whatever kind of disintegration and revolution comes of that. I think the end result will be directed by the people, for example, the World Economic Forum participants and others who have the resources to let such things play out and then to pick up the pieces afterwards, usually for pennies on the dollar. That's unfortunately the script, the template, the transcript that's been written. But it doesn't have to be that way. And if an informed populace actually knows what they are doing and why they are doing it, I think we could see a different outcome.
Do you think really the next revolution again will be very much like the Russian Revolution, where they hated the rich and they just wanted to seize their assets? You weren't allowed to have a large amount of money.
That's certainly one way that this type of revolutionary moment could play out. Certainly the great inequality between the very richest and the very poorest in our society has probably never been larger than it is right now, or at least it would be hard to think of times and scenarios in which the so-called elite, the elitists, have lived so much more grandly than the poorest of the poor, and unfortunately that divide is becoming even larger as we move forward. And as we know, the world's billionaires have made more money over the past year, even as the average person has been told they have to stay home and lose their job. So clearly, again, I think resentment is building towards that sort of disparity, and this is the exact type of talk that, for example, the World Economic Forum latches onto, and they talk about, well, we're going to have to form a new social contract, and it will be more equal and inclusive, and they use all the buzzwords to hide what this is really about, I think, ultimately. But yes, I think there has to be some reckoning to the incredible riches that have been amassed by very few people at the expense of the mass of humanity. And I don't know what form that reckoning will take, but again, I think it's predicated on how informed the population is about the real meaning of what's happening right now.
Do you have any words of wisdom for us?
I'd say don't accept any plug nickels, but or wooden nickels, but I'm not sure if do you even use nickels anymore in Canada? I know the penny's out. Maybe the nickel's on its way out as well.
Well, with the price of lumber, maybe a wooden nickel is worth a dime now.
It could be. Oh, boy.
James, where can people follow you and your documentary work?
CorbettReport.com. That's CORBETT report.com. Thousands and thousands of hours of audio and video reports available for free download and perusing there. And on the sidebar, I do have a little box that you can click on for all of my documentaries in particular. Again, several hours worth of documentaries completely available for free. I hope people will use it as a resource.
And one of the last ones you did was on the causes of the First World War, was it not?
I actually released that in 2018. I had to re-release it because YouTube, for whatever reason, age-restricted one of the parts of that documentary, because how dare you actually want to look at a documentary about the First World War, which included zero violence or gore, other than a couple of archival scenes of actual stock footage of the First World War. It was so again, why are they age restricting that video? I'm not sure, but that compelled me to compile that 3-part documentary into one documentary and re-release it on not only my YouTube channel, but more importantly on my website and on the other social media platforms that I use. I hope people in your audience know by now, YouTube is not a reliable way to get your information on important subjects these days because they are age restricting and or censoring various things that I do. For example, my Bill Gates documentary, I just got a message a few hours ago that they have now restricted one of the parts of that documentary on YouTube, taken it down off of YouTube. So if you want to see that Bill Gates documentary, the best place to go would be CorbettReport.com/Gates.
James, as always, great chatting with you.
I appreciate you taking the time to talk with me. I'm looking forward to doing it again.
My guest has been James Corbett, publisher of the CorbettReport.com. He was speaking to us from Japan. Coming up, Wolf Richter talks to us from San Francisco. Next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Wolf Richter, publisher of WolfStreet.com. He's speaking to us from San Francisco. Welcome back to This Week in Money, Wolf.
Thanks, Jim, for having me on.
Wolf, can you tell our listeners a little bit about Wolf Street?
Yeah, so WolfStreet.com is a business and finance site. That's all we discuss, business, finance, economics, and it's free for everybody, and we don't dumb it down for anybody. We have pretty intelligent discussions, but it's open for everybody, and we get into details that the financial media doesn't normally get into.
Your thoughts on interest rates perhaps doubling compared to what happened in the early 80s when we saw interest rates go from 10 to 20% seemingly overnight?
Yeah, so interest rates could double and from where we are, but the impact will be different than going from 10% to 20%. The 10-year Treasury yield has already nearly doubled since August. So back in August, it was 0.54% or something like that, just a little over 0.5%. Now we're looking at 1.3%, and yeah, so actually has more than doubled, and the 30-year yield has about doubled. So, I mean, the doubling of the Treasury yield has already taken place. So if it doubles from here again, the 10-year yield, it would take it to about 2.6%. And that would still be relatively low by historical standards, but it will be a kind of a rough period here because, you know, it will be competing with all kinds of dividend yields. Right now, the dividend yield of the S&P 500 is below 2%. So dividend investors might want to choose 10-year Treasuries, which would provide a higher yield at 2.6% than the S&P 500 yield would provide. And so when you have these rising yields, it shifts investment priorities around, but also it raises the cost of money for businesses. And so far, the Fed has agreed that this rising long-term interest rate environment is a good process, that it shows there's inflation expectations and it shows that there's growth, and so they have not tried to crack down on these rising interest rates. I don't know at what point they may crack down. So in terms of bondholders who are holding long-term bonds, it's been a very rough period the last few months. And yeah, in terms of investment-grade corporate bonds and in particular Treasury securities. Now, junk bonds, on the other hand, have not at all reacted yet to the rising interest rates. So the higher the risk is, the less connected they are at this point to Treasury yields. Junk bond yields have dropped to record lows in recent days, and then they've been dropping from record low to record low, and they've hit new record lows in recent days. And they have just absolutely not reacted to this change in Treasury rates, in Treasury yields. Mortgage rates, which are crucial, have stopped dropping. They had dropped to record lows in December, and they stopped dropping at that point, and they have now ticked up a little bit. Now, the 30-year fixed rate mortgage rate, which is the standard mortgage rate in the United States, and most of these mortgages are backed by the government. So that's what we're talking about here, and it dropped to 2.68% in December. It's now in the 2.7, 2.8% range, and getting closer to 3% on some mortgages. So that will impact the housing market. The 30-year mortgage rate tends to track the 10-year Treasury yield, and the reason is that homeowners don't hold their house or don't own their house for that long yet. They usually sell and then pay off the mortgage. So these and that happens usually on average after about 11 or 12 years. So these mortgage rates tend to track the 10-year Treasury yield pretty closely. And they have just barely reacted to the surge in the 10-year yield. So I expect them to rise in the next few months. Now, all this is happening while the Fed is buying Treasury securities and mortgage-backed securities to the tune of about $110, $120 billion a month. So this puts downward pressure on interest rates, on yields, on long-term yields. So what the Fed is doing and has been doing for months in a kind of a constant way is putting downward pressure on these yields. And despite that downward pressure from QE, these yields have surged. And that to me shows there's a very powerful force behind this, and that's the fear of inflation. That is not everywhere. You can see it, and that interest rates can rise like this, long-term interest rates, when actually the Fed is buying securities to that extent. That's kind of an interesting thing, and it was by many people unexpected, and lots of people have lots of money invested in these long-term bonds, and they've been losing quite a bit of money. Some of these long-term bond funds are down 15 or 20% since August. So so if you're looking at another doubling of interest rates going forward, this is possible, that over the next 2 years or so we'll see that kind of scenario. I think it will put all kinds of pressure on asset prices from housing to stocks.
Have the low interest rates helped the drive of people moving from dense urban areas out to smaller cities and rural areas?
Yeah, that's lower interest rates help housing in general. So we've had these record low mortgage rates, and so that has boosted home ownership. But what we have seen, actually, that is an interesting phenomenon. People are not necessarily selling the home when they're moving to another place. They, seeing that home prices are rising, they're sort of hanging on to the first home, and they're buying a second home in the hope of selling the first home eventually and for more money. And so they're now owning two homes, and because interest rates are so low, mortgage rates are so low, it's easier to arbitrage home price increases that way a little bit, and we've seen quite a bit of that. Eventually, these homes that people no longer live in will have to come on the market, and this has already started to happen in some places. But low mortgage rates have encouraged all kinds of things, and not only moving from the city to the suburbs, but also not selling the home that they have in the city, and instead buying the second home out in the suburbs and waiting for putting the first home on the market, which has created some of these bizarre distortions in the housing market that we have seen, these shortages in the suburbs, and in some cities relatively low inventories, even though in San Francisco now this has changed. There's a flood of inventory on the market in San Francisco right now, and especially of condos, and so this has the housing market in San Francisco is looking at a glut. And but most cities are not that way, and so those homes in the cities that people have moved out, they haven't really hit the market yet.
Wolf, are vehicle sales being affected by interest rates? So
low interest rates help, that's for sure. Extending loan terms help. So loans have been getting longer. Now we're looking at 6-year loans and 7-year loans and those kinds of things. Vehicle prices have gotten a lot more expensive, and so in terms of new vehicles, it has pushed a big part of the population out of the market. So they can only buy used vehicles now. But there are a lot of people that made tons of money during the pandemic in the stock market and working from home, etc. And they've been buying expensive vehicles and expensive trucks, expensive SUVs, and those vehicles have been doing really well. Now, used vehicles are also doing pretty well, especially on the lower end. But what we have seen is an incredible surge in prices. And even though overall volume in vehicle sales was still down in December and in January, so we're not looking at a hot market. We're looking at a market that is hot in some corners at the high end, in trucks especially, and prices across the board have now surged. So we're looking at new and used vehicle price increases. We're looking at consumers that are willing to pay those prices. Consumers they accept this level of inflation. We just got the earnings yesterday from AutoNation. They have reported essentially record price increases on the new vehicle side, record gross profits. very strong profits on the used vehicle side. Despite new vehicle sales were actually down in the fourth quarter for AutoNation, but they they had price increases to that extent that they achieved record sales based on price increases and record gross profits based on these price increases. Their finance rates, their finance profits, so the F&I profits were extraordinary, and that's where the interest rates come in. Interest rates for dealers, so the buy rates that they get from lenders, they have dropped sharply, but they don't necessarily pass on those rates to consumers. So the rates that consumers pay for vehicles really hasn't changed all that much. And they're still low, but they're not as low as they could be. And dealers are really profiting from that, in that they get paid a commission on the spread. And I don't know that low interest rates have really boosted car sales, because the number of sales actually hasn't gone up. It's gone down. But the profits have gone up. So for dealers, the profits are extraordinary right now for the vehicles that they sell. And low interest rates may have encouraged that, as have certain shortages and in some other areas, and just the whole stimulus economy that we have and all the distortions in it. So right now, even though dealers are selling a little less than they did before, they have just profited massively from these big price increases. And I think low interest rates have something to do with the ability of dealers to raise prices like that.
Do these COVID markets make any sense? And it looks like anything from cryptocurrencies to soybeans, everything is just going crazy.
Yeah, and crazy is the right word here. The various levels of craziness are just astounding. I've never seen anything like that. Not only what's going on in cryptocurrencies, but also in various segments of the stock market. Then you have commodity prices surging all around, really just about every commodity. Then there's some shortages cropping up now throughout the system, from cardboard boxes to microchips. And when we had an enormous shift from consumer spending on certain types of services, such as bookings of hotels and airlines, and going on vacation and eating at restaurants, and getting the haircut, to goods. And that shift from services to goods has been dramatic. And good sales, durable good sales especially, have spiked by historic rates. And this was fed by stimulus money and all kinds of things. So now we have these problems in our supply chains where you can't get certain things. And if you can't get a microchip if you just miss one microchip for a car, you can't put the car together. The whole car, there's thousands of chips in it, but if you miss one of them, you can't put the car together. So we've got a little bit of a chaos situation here that was caused by these distortions of the COVID economy, and this has changed everything. Now we have people speculating on everything, and they're speculating on the craziest things, and they're driving up prices like you wouldn't believe. And so commodity prices are somewhat linked to the shortages we've seen in the supply chains, but not necessarily. But then there are other things that are not linked to anything. They're just surging and to crazy levels. And then after a while, some of them have collapsed, and including these most shorted stocks, the Robinhood and Reddit trade that was talked about so much. I mean, these stocks have totally collapsed by now. And so this doesn't last forever, but it is just an incredibly insane market. And there's way too much liquidity out there, way too much risk-taking, way too much leverage. Leverage amounts are huge, and there's little things that happen, and suddenly something blows up. And, it just, this market is teetering on the edge in every aspect. Now long-term rates are rising, and that's not going to be particularly great for financial markets. So, it's kind of a worrisome thing to look at, that this amount of speculation and this amount of leverage, and the craziness of it all, that you see in the markets out there.
Do you think the markets are about to be hit by a major correction like they were last March?
Yeah, I don't know that the correction last March can be duplicated, because it was very steep, and when there were double-digit plunges in the stock market in single days. That is very rare, and we had a bunch of those last year. Where stocks would drop 10, 11, or 12% in a day, and for the stock market index, the overall index, and so that's just not happening a lot. So I don't think I expect to see that kind of sudden plunge in stock prices. I do see this market from running aground, and I, rather than being really fast and furious like it was last March. I mean, this whole thing only took 3 weeks last March. I think if there's this kind of sell-off going on, it would be slower. It would be much more filled with ups and downs and drag out, more like the sell-offs we had in prior times, such as during the financial crisis or during the dot-com bust. And dot-com bust sell-off, that took 2 years and to work through, and it had many rallies in between, and so it was really a rough 2 years, and in the end the Nasdaq sold off 78% over the time period. So I can see something like that. I cannot see a 3 week collapse like we had in last March.
Cryptocurrency mania, Bitcoin, it seems it's unstoppable at this moment, but will the brakes be put on like the last time it went for a charge 3 years ago?
This whole crypto thing is amazing. There are many thousands of cryptocurrencies out there now. Everybody can do their own, so, and they're getting hyped here and there, and they have sort of this religious community behind them, and they're trying to promote it. Bitcoin is the biggest one, obviously, but there's thousands of others. And, it is a mania. Wall Street is starting to promote Bitcoin. That's an interesting thing. I mean, it's still just a useless digital entity that has been created and doesn't back anything, doesn't pay anything. It just it's an artificial construct and as a digital entity. So there is no particular value to it. It's whatever somebody's willing to pay for it. It's not related to anything. It doesn't have any sales, doesn't have any profits, doesn't pay dividends, it doesn't pay interest. It can't go bankrupt. It might not exist, and then it can get stolen, and you might lose your password and it's gone, that kind of thing. But and then gone for good. You won't be able to get it back, so it's just it's gambling. That's what it is, and hoping that there will be somebody out there that will pay you more money for this thing, and I've got to the point where it's fine with me. I mean, if that's if that's what people want, let them have it. That's fine with me.
Wolf, thank you so much for chatting with us.
Thank you, Jim.
My guest has been Wolf Richter, publisher of wolfstreet.com. He was speaking to us from San Francisco. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, James Corbett, and Wolf Richter. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@housestreet.com. Now stand by for a company showcase update from American Manganese CEO Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Ray, CEO and President of American Manganese. Welcome back to the show, Larry.
Hi, Jim. It's always great to be on the show. To start off, I'd like to extend a hearty welcome to Jochen Rudat, our new advisory board member that's got 10 years experience with Tesla. And I think he's going to do a tremendous job for us in Europe. So I'm just extending my congratulations and welcome to him.
A busy day in your office on Friday. What was going on?
Oh, well, we always have busy days, but we were getting a press release ready, and I didn't want to do the podcast before that went out so I could, say a few words about it. And it's a very progressive press release on the cathode reactor product, and it's just an update and where we're at and where it has to go. You have to remember, this is a new piece of equipment, not only to us but to Cometco, and just putting it together was quite a chore, and but that's all done now. And we've just announced that we've got some material from our first testing, and that is going out for X-ray diffraction testing, and it's going out for scanning electron microscopy, and inductively coupled plasma. Some big words there. Particle size analyzer. Now, we all understand that. But just to let people know that our feet are both in the water and we're moving ahead with this project, and they can expect more news. And moving away from that, we'll attach a press release to this podcast. We did send it out to the eye contacts and everybody just before the market closed, because it looked like on the third attempt these guys were going to try to push us down below $2. And when I say guys, I'm talking about predators. And I will attach the predator trading in the U.S. The predator trading in Canada is a joke. There's no rule that says you have to report the predator trading, so nobody does. Just a couple of brokerage firms or banks report it, and that's it. We know different. We know that you can't be shorting thousands of shares in the U.S. and less than 100 shares in Canada in a day. I mean, Canada, where there's no uptick rule. Give me a break. But that's enough said about that. There's a few other things that are exciting me about the market, and one is the price of copper and nickel. Copper's at 10-year highs at $4.04, and nickel is up to just about up to $9. So that's always good for us. The copper for our spin out, and we're still working away on that. But it's in the hands of our law firm and the venture exchange. So there's not much I can do about that. But we expect to have that happen. And, the price of copper at $4.04 has got to make people's mouth water when they look at the stuff that was mined off of the Rocher-de-Bois property that averaged 6% copper. So don't forget that. That's a huge, significant number for a emerging copper play. It's at historic reproduction, and that's all I can say about that. Now, we've also got work ongoing with our testing for the DLA on the Wendon strategic stockpile. We should have results coming sometime soon, and we'll be announcing those. The last results were spectacular at 99%
purity, and it's 99% recovery, and we haven't done the purity test yet. But everything's looking good. You couldn't tell it by the market, which is dropped from its high of 286 down to 222 today. But that's the games that these guys play, and I think there's a humongous short position on the company, and that's from tracking it from 10 years. So I think what I have to say has some merit. But again, that's just speculation because these guys are not reporting what they're shorting. And, a lot of this shorting going on in the U.S. is arbitrage into the Canadian market. And that's to take down the Canadian market where they buy it back at lower prices. So take it down in the U.S. and bring the Canadian price down and flip over to the Canadian exchange and buy it back. And you can add those numbers up. You don't have to be a wizard to do that. You can see the amounts that are traded in the U.S., and you'll see similar amounts within a minute on the venture exchange. So other than that, I'm a happy camper. I mean, I don't think that these guys are going to win the battle at the end of the day. And, as far as I'm concerned, the short position is something that, will give us a huge boost sometime in the future. So, we'll stick with that. We're still waiting to get our uplisting to the OTCQB, and that we can expect at any time. So we got lots of stuff to report on, and there's more stuff in the pipeline that has to mature a bit before we can report on that. But it's an exciting times around here. We're busy, we're happy, and we're moving ahead every day. We're moving ahead, and everybody's a little surprised to see a midday press release come out, but I could see where the writing was on the wall where we were going to head. So I thought it was a good timely time to put it out. It took a while this morning to prepare it, and then it went out, and so here we are. We closed at 222, which is not a great number when you were looking at 260 not long ago, but I think this is a temporary setback, and it is artificial. I mean, you can't put out great news bagging a guy on our advisory board that had 10 years with Tesla, personal contact with Elon Musk, and built a huge sales force across Europe. And him on our advisory board was a huge plus. And you think we announced that we hired the janitor from downstairs, but the truth of the matter is, these guys who try to take good news and turn it into bad. You'll see it all over the billboards all the time. Misquotes, all kinds of things. Most of them don't have much intelligence, so it's really, you can see they've cobbed things here and cobbed things there, confused us with other companies, and then they badmouth us. So, I know a lot of people that sold their stock at 20 to 25 because they went to the billboards and started reading them, and that's enough to depress anybody. I don't go to them because it depresses me. And, and it's all bullshit. It's all on our site. Anything you want to find out, you can go to our site and you can find it out. And that's the true news, and that's transparency. So, I'm going to try and keep this short, Jim, and wish you a great weekend.
Larry, for people new to American Manganese, what's the company all about?
American Manganese is a critical metals company that has a few things in action right now. Our initial action on manganese resulted in our entering into the recycling of lithium-ion battery phase because we borrowed from that patent, and now we have 2 patents there. We're doing a spin-out because I think copper gold is going to be tremendous. We're not going to get the value while it's locked into the company, but if we spin out free shares to existing shareholders on a ratio that's going to be determined by the judicial courts, then that's got to be a win-win for any shareholder out there. And we are traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. And we're traded in the Frankfurt Exchange under the symbol 2AM. Our website is AmericanManganeseInc.com. That's where you should go to do due diligence on the company. The bull boards, no. And, that's just not the way to do it. I mean, those people that sold the stock, and I know some of them personally, and they were fairly close to me, and I see them miss out on a 10 to 12 bagger. Doesn't make me happy. But they kept reading those posts, and they came to the conclusion that we weren't going anywhere, so they sold their stock. And that couldn't be anything further from the truth. Now, you can contact the company at 778-574-4444, or you can email me at LREAUGH@AMYMN.com.
Larry, thank you so much for the update.
You're welcome.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on February 19th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.